Hey guys, good morning everyone, and welcome back to our YouTube channel. I'm Harshit from Kepler Capital. I hope you are doing well. You are doing great. So today's video is all about basics and fundamentals of price action for trading, right? But before getting into the price action session, let's understand what does price action mean by. So as the word suggests, price means the price as in general of any asset or any financial instrument, and action is the action of the price, like how the price is behaving in the market according to some sort of sentiment, some sort of news, some sort of uh, I can say greed, emotions, etc. Price action is nothing but the action in which the price is behaving in the market. Now, price action is a completely different theory, but in today's, it's basically vast, it's massive. But in today's video or today's session, we are going to see the fundamental blocks of the price action to get the glimpse, to get the summary, to get the highlight of what exactly the price action is. And obviously, um, for a beginner or for a new trader, it will be helpful to figure out, like, where where the price will go from here, where the price will go from there, etc. So let's begin. To begin with, the first concept of price action is supply and demand. So what is supply and demand? So we have learned from our childhood, right? Uh, like when there is excess supply, the prices of any asset class goes down, wherein where there is excess demand, the prices of any asset class goes above or goes higher and higher. So let's consider over here, for example. So see, this is the supply zone, this is the demand zone, the blue one. So prices tend to fall from the supply zone because there are no buyers to buy and there are n number of sellers to sell. So therefore, the prices go down. On the other hand, the demand zone, over here, the prices tend to move higher and higher from the demand zone because the prices, sorry, because there are n number of buyers to buy and there are no interest of sellers to sell. So in short, at supply zone, sellers basically win the race, and at demand zone, buyers basically win the race. We can conclude with this. So now in trading or in investing, at supply zone, traders or investors tend to short sell, or and on the demand zone, traders or investors tend to go long on the stock or on the index as in general. We can see on the chart as well. This is Bank Nifty's chart. I'll go on a 1 hour time frame, and but how to basically mark the supply and demand zone. So you can see wherever the prices goes down, we can draw a rectangle like this, and I'll mark it with a red highlighter. And for the demand zone, you can mark it with a green or blue highlighter. So supply and demand zone is a zone like 40, 50 points or 20, 60 points, and it's not a single point or single key level as in resistance or support. So this is a demand zone. It's a basic example. See, from demand zone, buyers have shown interest in buying and therefore the prices have shoot out. On the other hand, on the supply zone, sellers have shown keen interest. Sellers overpowered buyers, and therefore the prices tend to go down. So this is an example, super simple example. You can backtest supply and demand strategy on the previous charts as well. You will understand, and make sure to backtest as well. The second concept is price and volume. So what is price and volume, and what is the correlation between them? So price is nothing but the price of any instrument, financial instrument, be it stock, be it mutual fund, be it index fund, etc. And volume is nothing but the total volume of buyers and sellers. So let's say, let me put this way, right? So let's say the volume of buyers is more exponentially more than the volume of the sellers, then eventually the price will tend to move higher. On the other hand, let's say if the volume of the sellers is low as compared to the volume of the buyers, then prices will tend to go down. So this is price volume. See, volume is higher, market will go up. Now, why? Because the volume is bullish, like volume is of buyers, so therefore market will go down. On the other hand, if the volume is of sellers, then market will obviously tend to go down. Market or price as in general. So it's important to understand next concept, market structure. What is market structure? Structure. See, so market basically moves in a specific trend or specific way, depending on the human psychology, like traders, investors' psychology, big players like DIs, FIs, then banks, mutual fund houses, brokerage houses, etc. So market basically moves into three phases. The first phase is the downtrend, the second phase is the uptrend, and the middle phase is accumulation. So to put in layman's language, uptrend is nothing but where there are excess number of buyers. Downtrend is nothing but where there are excess numbers of sellers, and accumulation is nothing but there is a balance between buyers and sellers. And basically buyers are kind of fighting in the accumulation zone or in the sideways markets, and as it is considered or it is believed that after accumulation, a big move like in a uptrend or a downtrend will happen after an accumulation phase of the stock. So you can see over here, this is the downtrend, accumulation, and uptrend. Let's see in the charts as well. See, this is bank nifty. See, this is the accumulation phase, as you can see, this one, correct? And after accumulation, there is an incredibly higher high move over here. This is the uptrend, right? This is the accumulation. This is the uptrend. See, here also the accumulation was there, sort of. This is the accumulation. This is completely accumulation. This we can consider downtrend. See, after stock was fallen, then there was a fight between buyers, sellers, and buyers overbought, and eventually market or prices tend to go higher and higher. So this is the accumulation, uptrend, and downtrend. Simple. And what is uptrend? So uptrend is nothing but when prices move to tend in a particular direction for a specific period of time. So yeah, see, stock prices are here. Let's say it will go higher. It will create new higher high. It will then create new higher low. It will create new higher high. It will create new higher low. It will create new higher high. It will create new higher low. So let's see over in the chart, correct? Yeah. This is a clear uptrend, right? Let's consider this point and let's mark. See, this is the new higher high, higher low, then higher high, higher low, higher high, higher low, and here is the end of the downtrend because this higher high have not created a new higher high over here, but it have basically break this level. So now my prediction is market will form an M pattern over here, something like double top or something, and it will reverse down in the downtrend direction. Next one is downtrend. Similarly with the uptrend, the concept of the downtrend is super simple. In downtrend, prices tend to behave or move in lower high, lower low, lower high, lower low, lower high direction. Let's see in the chart as well. So this was the uptrend. This was the accumulation, and let's go with the downtrend now. See, it's a clear downtrend over here because the trend line have basically touched 3 times. See, lower low, one second. Sorry, lower high, lower low, lower high, lower low, lower high, lower low, lower high. That's all. Once the trend line is break, then market have moved to accumulation zone, and obviously then that's a different story. So this is the clear downtrend. And finally, number three is sideways trend. As I mentioned, sideways trend is basically a zone where buyers and sellers are into balance like 50-50%, and they are basically into fights like buyers are telling we want to take prices upwards, wherein sellers are telling that we want to take prices downward. So there is a fight, and like this fight depends on on a daily basis or maybe on intraday basis as well. So after accumulation or distribution phase, markets tend to behave exponentially. Market tends to give a great momentum in an uptrend or in a down based direction. So these was the basic fundamental concepts of price action. I hope this was insightful for you. Let's see candlestick, price action, etc. patterns in the next session. So that's all from my side today. Thanks for watching. Do subscribe, like, and share with your friends and new traders as well.